Most people think life insurance can only pay out after you die. But if you get diagnosed with cancer, the right policy can actually pay you while you're still alive. It'll pay out money that you can use for your mortgage, treatment, or just to keep the lights on if you can't work. So it's called living benefits. And in this video, I'll show you how it works and how you can get the money. So let's walk through it. Now, first off, this feature doesn't exist with all life insurance companies. There's only some life insurance companies that will offer you a policy that has this living benefits in it. So check your policy, see whether yours has it or not. Otherwise, you won't be able to do it. Now, put plainly, living benefits are just an add-on, a rider to your policy that says if you get hit with a serious illness like cancer, you can pull out a portion of your death benefit early before you die in order to be able to use it for whatever you want. Now, these living benefits, these add-ons, come in a couple of ways. Usually they're called terminal illness, critical illness, or chronic illness. If you have cancer or get diagnosed with cancer, you're going to fall in the critical illness or terminal illness camp. So a very important key point is you have to make sure that before a diagnosis, your policy has these add-ons. You can't just get a diagnosis and then ask your company, your life insurance company, to add these add-ons if that company even offers it and you didn't have that policy with those add-ons before. So super important, if your policy doesn't have these add-ons now, look for a company that can offer these add-ons and then get the policy with the add-ons before your diagnosis. Otherwise, you're not going to be able to get that money paid out to you. So step by step, how does this happen? Well, first off, you get diagnosed with cancer. Your doctor then documents it, obviously. You would then have to go to your agent and let them know about the diagnosis and file with your life insurance company. After it gets approved, then that money gets sent out to you as a lump sum by your life insurance company. Now, the money doesn't come out of nowhere. It comes out of your death benefit. So a portion of your death benefit will be given to you, and your current policy that you would have, its death benefit would be reduced by the amount that you're getting. Now, once you get that lump sum paid out to you, there's no stipulation on how you can use that money. You can do it for treatment. Maybe there's some experimental treatment that otherwise you couldn't afford that you want to go for it and do. You can do that experimental treatment now. Or maybe you want to pay down your mortgage. You can use that money to pay down your mortgage. Or maybe you want to travel. You can go travel or just buy groceries with it. There's no stipulation on how you can use the money that's paid out to you, and that's why this is so powerful. Now, a big caveat of this is that since the money is coming out of the death benefit, if, for example, this was terminal or you were to die right after, your family would not be getting the life insurance payout that they thought they were going to get. So life after you might be a lot more difficult for your family if they thought they were, for example, getting $1 million, but now they're only getting 500,000 or maybe 750,000 or even less. So super important, keep that in mind. It does pull from the death benefit. It reduces that death benefit, and whatever your family would get out of it that you maybe planned out, that's going to be way reduced. And that can cause future issues for your family. Another caveat is you have to remember there's always severity requirements related with this, and there is waiting periods to get actually paid out. So it's not going to happen right away. You're going to submit this to the company. They're going to go over it, make sure that it qualifies under what cancers they say it would qualify for. And depending on the severity, you would get the payout thereafter. Payouts can usually take weeks, sometimes months, depending on how much information the company has to go through. So definitely plan accordingly. But even with all those caveats, I would say, in my opinion, you should get a policy with living benefits. I think it's a no-brainer. I think that it can help you in your toughest moments to get that payout made out to you. Case in point, if you have to skip work, and this could be a type of cancer that requires surgery, but after the surgery, everything's fine and it's not recurring and you're pretty young, well, that time off work is going to be very detrimental to your wallet. So if you can get money out of this life insurance policy paid out to you, especially now that cancers are happening to people who are very young, in their 30s, 20s sometimes, very, very important to get a policy that will help you out in those toughest times. So I hope this helped. I hope this gave you some further insight in that life insurance policies aren't just a one shoe fits all. It's very important to look at the fine print and see if your policy has living benefits. And if it doesn't, you can always ask agents around to see for companies that do sell policies with living benefits and get one of those instead. So if you have any further questions, just let me know. Just put them down in the comments and I'll make sure to get to it. Thanks so much.